should we be concerned about liquidity in the future? This might be for a little bit for you and for Roy as well, and particularly for business planning or expansions. Do you see, Troy, is there going to be a squeeze on liquidity? And Roy, I'll hand to you after. Do we need to be thinking about that as business owners? That's obviously come from one of your clients, Roy.
Right, okay, I'll focus my comments really on market liquidity.
Okay.
And we did see an enormous collapse of liquidity in this recent pandemic downturn. And what that saw was one of the largest global monetary policy responses in history to restore liquidity to markets, debt markets and capital markets more broadly. That monetary policy action, continues today, and, there's basically unlimited, I think there's a saying, never bet against the central banks. And they've got really unlimited capacity to provide that liquidity. They've also implemented a range of measures that are, encouraging, investment banks, for example, in the US, to find high-grade, corporate bond securities that they can sell back to the Fed and make profits. So there's an enormous energy in the policy that's going on to restore liquidity. And I think we're seeing liquidity come back to financial markets. Periodically, there will be further bouts of liquidity pressure, but what we're seeing is central banks globally are very aware of the damage that can create, and are very fast to come and preserve that. We've seen in Australia for the first time, the central bank consciously buying, government securities to maintain sort of interest rates at a margin above the cash rate. And that's flowing into corporate securities, benefiting them as well. So all up, that'd be my comments there.
Thanks, Troy. Or as a business owner, what should we be thinking and looking for?
I think the banks have already started to move at the ground level. I was on a webinar this morning with a bank. I shouldn't name who they are, but their initials are Bank of Queensland. And they actually said that they are shifting from 80% as being their preferred lending LVR down to 70%. Yep. And other banks will follow suit on that. And if they get a housing application, normal everyday or business loan application, if they see the payslip and it's got JobKeeper on it, they are putting that application aside and saying, well, we don't know what will happen after JobKeeper and if you will have a job. So they're declining more than they're approving. And it's no longer about who's going to give me the best rate. It's about who's going to do the deal. So that has started to shift. It is just fortunate right now in business world, given the turmoil we're going through, the government have offered up to $250,000 in loans, which are 50% government guaranteed, allowing the banks to lend at reasonable rates and relatively easily. But having seen a number of businesses go through that process, there are hoops to jump through. They're still making sure that the business is very viable. It's not just money for jam. So, I think we've already started to see that shift, that the banks need to make sure and protect their asset base, that they're not lending to businesses that are going to get to September and fall over anyway.
Yeah, okay. So good business principles convey or remain, be prepared, have a plan, and make sure you got your money in reserve.
Correct. And forecast. Do your cash forecasts.
Yeah, correct. Yeah, and see you to do it.
Yes.
Yes. Okay, fantastic.